Today, I'm going to be talking about AITX, specifically about this recent press release, AITX Forecasts Profitability, and I decided to build my own model of what I think it would take for them to reach profitability. And my numbers don't quite line up with theirs, so I'm a little skeptical of what they put out. So I wanted to go through my model today and share all my assumptions so that you can use this for your own research. Before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position, long or short, in AITX, so this video should be for your entertainment purposes only. Because I could be wrong about everything that I say in this video, you need to do your own research before making any investment decisions. So the main points out of this particular press release are they say this is as of July 11th. The company today announced that it sees a clear pathway to profitability within 24 months. And there's a couple things about how they see their current sales pipeline, which is good. But they basically have these projections down here. This is what I'm really looking at. Once we get, this is a quote, once we get in the range of 1,000 to 1,400 deployed units, generating a stream of revenue, we expect to see an operational cash flow break even depending on the product mix. So that is kind of what I'm looking at. And then they said, moving forward, SG&A expenses are expected to grow only in support of future demand and revenue growth. Hi, Jay. Jay says, real quick, thank you for joining, Jay. Love to see you on here. My perception was AITX isn't a serious investment, but your video is great information. Thank you. Just this is a quick aside for anybody who's watching. Then I'll get back to the main content here. AITX is interesting. A lot of people are very passionate about the company, one direction or the other. I see some red flags. That's why I haven't invested. I think if they cleared up certain things and they continue growing, it's possible that it could be a good investment. As of right now, super transparent, I am not invested in it, and there are, reasons for that. But I build my models and it's on my watch list, and I am happy to be patient for years, and if circumstances change and at some point I think it flips and I think that it has good potential, good risk reward, then I will happily purchase some shares, but they're not at that point right now. All right, so back to my model. Thank you, Jay. Hi, R. Gilbert. R. Gilbert says, what's going on? Hey, I'm just going over some my model for AITX. After I get through this, I'm happy to chat about whatever anybody in the stream wants to. Maybe give me about 5 or 10 minutes or so if there's some other topic you want to talk about. But yeah, I'm talking about AITX today. How many units are going to need to be profitable, and roughly how I model this out. So my model mostly pulls from data from their most recent quarter, and then a couple I had to look back a little bit. I'm gonna go through a couple of my quick assumptions. If you want the bottom line, if that's all you're here for, bottom line, I modeled out their 1,000 and 1,400 devices at their current revenue per device that they roughly have, and I don't think they're close to operating profit at that point, right? I think they're actually still losing $2 million a quarter at that point. I think it's going to take them two things in order to actually reach operating profitability. One is I think they're going to need more like 2,600 devices, and number two is I think they're going to have to start selling devices that generate more revenue. Namely, these are their Romeos, their mobile units that I think roughly bring in about 10x the amount of revenue as their Rosos, which are what most of their deployed units are currently. So I think if they hit that point, that's when they'll actually hit a sort of roughly break even operating income. However, because of some other things they have, that because of their pre-sold revenue and because of the interest payments, even at that point they're still losing money. I think they're going to need even roughly double from that point, getting all the way up to about 4,700 units deployed before they actually would be generating any net income. And that's sort of a loose term because there's some other aspects to it, but that's roughly how I model things out. So that's the bottom line. I guess I'll go through my assumptions while I have this up right here. I got the revenue per device number from looking at the most recent quarter, dividing out the revenue they brought in by 250 because they disclosed that they had about 250 units deployed. So that may not be exactly correct, but it should be in the ballpark. That comes out to about $500 per unit per month, which I think is roughly what they get for their Rosas, I think, and I think that's the vast majority of what they have deployed. The number of devices is just a number I'm plugging in here as part of the model. And so you multiply to get the revenue. I'm assuming their gross profit is 60%. Now, this is a bit optimistic. Their trailing 12 months gross margins have been more like, I think it's 48%. They specifically called out some inventory write-offs that were a part of that. And so I just said, you know what, for this model, I'm being optimistic, right? Because I want to say sort of at least the number of devices they need deployed. That's the question I'm trying to answer here. And so I was a little bit, optimistic for them and said that they would achieve 60% gross margins in the future, even though they haven't actually achieved that in the trailing 12 months, right? They do on some quarters, but then when they had a huge write down just in the most recent quarter. And so if you average that out, they're not at 60% right now. They're more like 50%. So we'll just look at that. And then I took their R&D, their general administrative, and their depreciation and their operating lease, and I roughly kept all of these the same as their most recent quarter, even though we'll be looking, a year or two in the future. And so I think that's a very optimistic view of the world to say that those would not increase. The one thing that does increase with this is, if you can't already see it there, is the depreciation number. I am using a figure. I divided out their most recent depreciation numbers per device. And so I think I came up with $330 per device per quarter, right? This is just the value of the revenue earning devices divided over 48 months. That's the way that they depreciate these things. And so that number does actually scale up as they have more devices deployed. And I include this in here as an expense. Number one, because it is actually listed as an operating expense. And I know this isn't a cash expense, but it will translate into a cash expense as they have to actually replace these. And one quick note that I did not add in here for operating expenses is I did not add in what I think would be increased service calls for if they start deploying mobile devices for Romeos, right? There's a lot more moving pieces on those, and I have to imagine that those are going to break at a higher rate than what the Rosas are, just the stationary units that have, cameras in them, don't move. And so that's one thing that I actually didn't even include in here. And so that's maybe even making this model more optimistic than reality will be. So those are the assumptions that go into that. And so that's how I actually get to the operating income figure down here, where I just subtract the operating expenses off of the gross profit. And that is how I'm getting with my numbers, where, I'm just, again, going back to the quote here of, in the range of 1,000 to 1,400 deployed units. If we look at their current revenue per device, even at 1,400 devices, they're only even making, $2 million roughly per quarter in revenue. Their operating expenses, even if you want to argue with me over the depreciation, they're above that just in their G&A. Their R&D is $1 million per quarter. So I mean, I don't even think they're going to be close to 1,400 at their current revenue per device. If I made a different figure here, which is roughly more than double the revenue per device, if I assume their product mix changes a bit and they actually sell 15% of the Romeos, which are their mobile units. I don't think they've sold very many of them to date, but if you are optimistic and say they would be selling 15% as Romeos, and that those would actually generate 10x as much revenue, keeping the same profit margins, the 60% profit margin, then your revenue per device, overall increases pretty drastically, to about $3,500, $3,600 per device per quarter. And so I think even at 1,400 devices, with that amount of revenue per device, the numbers look closer, but they're still losing, per my model, $1.5 million per quarter, just in operating income. And then, so I think able to actually get to be, to an operating profit, which I think is what they are talking about here when they have this quote, I think they would need more like 2,600 devices deployed with that product mix, where they are actually getting an average of $3,500, $3,600 per device per quarter in terms of revenue. And so that actually gets them to a break even here. Now, again, this is the asterisk here, and that's a break even operating income. they still have this, sort of weird arrangement where they took in some money at some point in time in the prior years, and sold some of their future revenue. And so this isn't reflected, as far as I can tell, in their statement of operations. This is just a balance sheet liability that goes up, and then cash that they have to pay out. But that pre-sold revenue scales up as just a percent of revenue. And so, if they're making $9 million per quarter in revenue, that means they have to pay a percentage of that. It's roughly 16%, I think it is, out as to whoever these investors were. That's $1.5 million. And so they're still losing, and then they have to pay interest on their debt. And so even at that point, with 2,600 units deployed, they would be, sort of at the bottom line, still unprofitable, still losing $1.6 million per quarter. And, because this percent of, revenue that they have to pay out scales up right with the revenue, they have to roughly, that does, and then also the depreciation does, right? Because the more machines they have deployed, more devices they have deployed, the more they're going to have to go out and replace those, as they actually age out. That gets us all the way up to roughly 4,700 units they'd have to deploy, or have deployed, and be earning revenue on, in order to, per my model, finally break even. And one of the other interesting things that I did throw out here is, if they progress those numbers over 2 years, they're burning cash in the meantime, right? Because those are a lot of quarters that are not profitable. So just getting to that, actually, let's be like super optimistic and say that they would get to this, what I'm calling roughly the $0 net income scenario here by the end, by 2 years from now, right? Where they forecasted profitability within 24 months. So if they got to that point within 24 months, that would be 4,700 devices, at this, and that they would scale up the revenue per device over the 2-year time period, because, as of right now, they're here. In 2 years, they'd be, $3,600 number, and it would scale up linearly across that point in time. And so by the end, you can see here that quarter looks, it's this column here, column J, that they do get to this, positive, what I'm calling, quote, net income, just because there's a couple factors. It's not true net income, but it's close enough for our model here. And getting to that point, they would roughly burn $14 million of cash. And so that's, I think, a very, very optimistic, in my opinion, there's a lot of optimistic assumptions that go into assuming that they're going to increase they're going to more than double the revenue per device over 2 years, and that they're going to, 20x their number of devices deployed, including a good chunk of those being devices that they have barely sold any of right now. Yeah, so roughly 20x, right? That's a 19x from there. So that is, my model on this, and what I think it would take for AITX to actually achieve profitability. So that was my my main topic for today. I know there were a couple folks on the stream. I don't know if you'll have any questions, comments, or other stuff you want to talk about. Be happy to chat about whatever. So I'll pause for a minute in case anybody has anything on their mind. While I am waiting to see if there is anything, I will mention for anyone who is watching this after the fact, I do these streams, these videos, I do them live as live streams on YouTube. I do them roughly 9, 10, 11, sometimes even midnight. But sometime in the evening, Eastern US time, usually as many days as I can hit, Sunday through Thursday. So feel free to hop on and join and chat with me through the YouTube chat if you want, or I'm always happy to get comments after the fact. I try to read all of them, respond to all of them. So let me know what you think. All right, I don't see anything else on the chat today, so I am gonna go ahead and end the video so that I do not waste your time anymore. Thank you very much for watching, and have a good one.